Greetings traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for April the 20th to 24th, 2020. And so this week, the market recovery continued. Right now, the V recovery scenario is the one that's currently playing out, and many stocks have returned to all-time highs. And the indices, we'll take a look at those later in the video, they're not far off, especially the NASDAQ. So the markets are doing as they always do, and that is to confuse the most amount of people for the most amount of the time. So let's talk about the week coming up here, and then we'll get into the charts. So in terms of the econ calendar, not that much on the calendar. There is, of course, the existing home sales on Tuesday at 10 o'clock. Got the oil number. Oil is the one asset class that is not rebounding. This thing is still near those lows. We've got that oil report on 10:30 at 10:30 on Wednesday, of course. And on Thursday, we have that jobless claims number once again. That's one that's we're all going to be watching to see if indeed we've peaked out or not, because the number this week was a little less than the week prior. It was 5.5 million jobless claims, but aggregated, we're at 22 million American citizens who've recently applied for jobless claims. I believe that's for the past 3 weeks now. So very, very big number still. And the question is, can the economy bounce back as quickly as the stock market? So that takes us to the actual earnings calendar, because so far this week we had a number of banks report earnings, and the earnings were not great. A lot of companies are still withholding their guidance because no one knows exactly how this recovery is going to play out. But the stocks themselves are, for the most part, are flying. So the financial stocks even did well on Friday. But we do have a busy earnings calendar this coming week. So check your earnings calendar. Make sure you're not taking any names you don't want to overnight or into earnings. We do have a pretty busy week. So Monday we've got IBM, Halliburton. We'll be watching those. Tuesday, Netflix, Snap, Chipotle, Coca-Cola, Lockheed Martin, Texas Instruments. There's a lot of names there. Wednesday we got Delta Airlines. Let's see what comes out of that. Alcoa, Las Vegas Sands, to see how the gaming industry is doing. Thursday we got Intel and Southwest. Also interesting to see how Domino's Pizza fares on Thursday. And on Friday we have American Express, Verizon, and a number of others to keep our eyes on. So that's it for the fundamentals front. Let's launch into the charts now and talk about the week that was. And we'll go into to some of the bigger names. We'll talk about the FAANG stocks today near the end of the video, and we'll quickly take a look and see how they're trading in relation to the actual indices. So let's begin as we always do with VIX, and the story is as follows. So this is a pretty flat chart here, but we've got to really zoom out or zoom in. Let's turn off some of this, but basically all you need to see here is this inside bar. So inside bar for the VIX right now, because we had a huge range in the month of March. We know that already. It was 100% plus return on the VIX in the month of March, but now it's decaying. So minus 15% right now, and clearly inside month. So on the weekly chart, you see looks like this, right? So we have 2 weeks done now in the month of April, and we've had 2 red weeks. So 2 down weeks for the week for the month of April. Currently, it's melting back into its range. So here we're starting to fill some gaps. You'll see it more now on the daily chart, and we finally got that break below this prior low. So if you recall what I was saying, this here is a it's basically an ABC wave. A, B, C B corrective wave, and then C continuation. We're looking to break below there, right? And it did it this past week. So here on Tuesday we had a gap down, and that finally closed the gap that we had been watching for a long time. 38.66. That was the gap. We'll delete that line now. There's actually a gap up here now. If the VIX ever decides to pop up, we got a gap there. So I covered my VIX short that had been short, for a while. It was dicey, but it was very slow. It was, this corrective wave chopped up a bunch of people. I was able to maintain my short, and I kept saying, you just want to know that if it doesn't come back through here, because that's the expectation. When you have a corrective move like this, or not corrective, but an impulse move like this, A, B, if it doesn't come back through here, then that's something you want to know about. But now you have this thing with full time frame alignment to the downside. There's your monthly quarterly open, that dark line there, and it's been trading below there pretty much since the beginning of the quarter and month, right? We had that one blurb here where it was 1 week where we're trading above it, but then it melted and it's been going down since. Choppy stuff now, right? So choppy stuff, not the nice smooth ride that we had, at the end of February all the way into March. So now VIX just decaying here. The fear is basically ebbing out of the markets. So we got another unfilled gap here. 34.11, so expect this to continue, right? So we have an A, B, C move here now, and expect at least this gap to get filled. If it doesn't, you want to know about that. But for now, we actually do have another gap here. So for now, I'll just go ahead and draw this gap in. Let's just draw in our gap here now. I'm just going to copy this one here. We'll drag it over, and we have a gap right there from the other day. So Tuesday, it gapped down. Then on Wednesday, it just stopped out a bunch of folks by gapping up. We had a Wednesday, Thursday rally on the VIX, but it gave back up again on Friday. It's come back down again. Because this essentially, and you'll see on the SPY, it's basically the mirror opposite, and I'll talk about that in a few moments. But it goes like this. Outside bar up. Once that low gets taken out, it melts, right? So basically, it's a reversal. Outside bar up. So that's an outside bar up. Comes back to the range again. So we had 1, 2, 3, 4 consecutive red days. Pops up. Corrective pattern, right? So A, B. Now looking for a C. Back through here again, at least taking out the low of this bar. Now, this here is perfect retest of the weekly open. See that purple line there? I'll zoom in a bit. You see that purple line? This blue line is the 8-period moving average. It breaks through, right, the weekly level, and then comes back up, retests the weekly open, cannot find any buyers to break above it, and comes back through the range, coming back through the range again. So that's what it looks like on the VIX chart. Pretty, I guess it's pretty tight stuff, right? So it is if you take a look at, say, the 4-hour chart. So here is the kind of choppy sequence. Outside bar, inside bar, down, 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 down. Then here's your gap down on Monday. Gaps up, right? There's the purple line. That's your weekly open. So this is the nice thing about looking at the 4-hour chart. You can get a little bit more granularity and see how it's actually playing out here with a little bit more detail. And here, this reversal looks like this. This is the reversal. That daily reversal looks like this on the 4-hour chart. Very nice reversal. Inside bar up. So it looks like the buyer's in control, right? Until it does that. Because that means the buyers and sellers found a equilibrium. And if it breaks below there, it's coming out the other side. That's exactly what happened on Friday. They could not keep the fear elevated. We gapped down in the morning. But once you gap down here, you're going to take out all these guys. And they did that. Take all those guys out. And now you have a little bit of extra price action here. Unfilled gap here to fill. So 37.41. Look for that area to get filled at some point, probably pretty soon. So SPY now. Let's go there, and I'll go deeper into the SPY as I've been doing the last few weeks now. But the rest of the charts look the same, or the rest of the indices. So it begins like this, right? So outside, inside. So these are quarterly bars. Outside, inside on the quarter. So right now, SPY has really come back from its prior bottom here. So we're up over, like from the bottom to here. It's rallied 31%. So it's been a really big bounce for the SPY and the rest of the indices. But we're still trading outside inside on the quarter. A very bullish scenario, I'll put it out there, would be if somehow price can come all the way back up and take out this pivot high in 1 quarter. If it does that and it goes outside, inside, and up, sorry, just outside and up, because right now it's an inside bar, but if the buyers can somehow push this thing to break above the prior quarter's highs and get back to all-time highs, you'd have to go another 18%, 18.3% roughly on the SPYs to do that. So is it possible? Yeah, it's possible. Probable. I still think it's a pretty tough thing to do. It'd be very remarkable if it happened, but if the Fed and the central banks and the governments continue to pump money into things and they want the stock market to bounce, then anything's possible. I think it's still improbable. What's more likely is that we stay inside this huge outside bar and we leave ourselves with an inside quarter, which sets up a very interesting Q3. As I said last week, we have a very interesting Q3 where we have the potential to go outside, inside, and then break up or down. If it goes outside, inside, and up, then yes, potentially we can come back up here and take those all-time highs out. But if it goes outside, inside, down, then guess what? You're retesting that low. All right, so let's hope that, mostly as I hope that, because it's going to be a very clean setup. So not that I really have any vested interest in going up or down. I want it to actually stay this way so that it sets up very, very cleanly so that we can define our trade very, very neatly in terms of the reward to risk setup. So ideally, from my perspective, say it's outside, inside, and then we have a really, really good, entertaining Q3. On the monthly chart, here we go. Outside, down, inside. So momentum still to the downside, Momo down, but getting close now to taking out that pivot high. So we break this here. So look, SPY only has to go from where we closed on Friday to that area, 9.5%. We go 9.5%. That's, we've had 5% days, in the past few weeks. If you have 2 back-to-back 5% days, that will take out that pivot high, and then that will extinguish that momentum to the downside. So that Momo down condition on the monthly chart will get extinguished if that happens. So we'll definitely watch for that. I want to pay attention to that. That will be significant, very significant, and that will change this thing from being an inside bar to a up bar, right? So the price will be up, not inside. That'll be significant. Okay, so all the indices look like that. So that's your weekly chart. So that's the monthly chart. That was your quarterly, and here's the weekly. So off that, bottom line broadening formation, you saw it already on the monthly chart. It literally bounced off that line that we had drawn in months ago, right? So if you look back on the videos, and I've been doing these videos now for over a year plus, every week, that line's been there, and it bounced off of it, and the buyers came back in full force. So now it's Momo up on the weekly. It's continuation. And as I've been saying, you do not want to fight price here, right? You can have some theories in your heads and some opinions about whether or not these markets can recover in such or such a way, whether it's a V or W or Nike swoosh. At the end of the day, though, price is what pays. And if you had simply just been following price, Momo up, 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 then you're not putting yourself in trouble. This week actually spent some time fighting price a bit and fighting the trend, and I'm sure I'm not the only person. I gave up some easy trades because I was looking for reversals. And in hindsight, and I'll say this time and time again, you're always better off trading with the trend. Okay, so for every failed reversal you try to take going against a trend, the trade with the trend will be a lot easier if you're just patient enough to wait for the trend to re-exert itself. So again, this is as much a reminder to myself as to the folks here, as folks listening to this video. And this is why I do the videos. In fact, one of the reasons I do the videos is to always it's a great exercise for me to remind myself about the principles, and that is just follow price, right? The less you fight price and let it lead, then the trading will get a lot easier. When you try to get too smart and try to call tops or bottoms and look for the tops and bottoms, that's when you can get in trouble and give back a lot of money. So at this point, price is just going up, and do not try to fight that trend until it looks like you can take out a prior low. So this Momo condition, so that's with that being said, there is a but in there, and that is do not fight trend, but or if unless there's a chance for a reversal on a wider time frame. So this week, remember, our ranges are drawn here. So let me draw a purple line here. We just take this one here now. We'll clone it. So the prior low was right here. The prior week's low was right there. Okay. This week, what was the chance that this week was going to take out that low to create a reversal? Very, very slim. We got as low as here, but that was still really far from taking out that prior week's low to create a weekly reversal. So the chance that happened was very, very unlikely, meaning had you taken any shorts this week on the SPY, those are supposed to be scalps or profit takers. You are not looking for this thing to go from here to there because that was very, very unlikely. Did it work? Had you tried, obviously did not work if you tried to short there. You're way better off simply waiting and then using this as a buying opportunity on a pullback, right? So that was the understanding there, especially since you have all the time frames on the long side. Here, weekly, monthly, opens right there, and it traded above the weekly open for most of the week. So on the daily chart now, looks like this. So here, Monday, it gaps down. So for one day, you're trading below the weekly open. That's that purple line. This purple dotted line here is the prior week's high, right? It breaks above the prior week's high on Tuesday, then does a small pullback. So some people here, myself included, got short in this sequence. I try to get short, try to get cute, and missed this buying opportunity here. So this is simple buying opportunity because you're buying, you've already popped above it. You've already broken above the prior week's high. That means it's continuation. This is a pullback that can be bought right on the weekly open. Then small move on Thursday, very tight stuff, only a 0.5% day. Then Friday, it's back to the races again, up 2.7%, right? So then you have an unfilled gap right here from March the 10th, and so you're getting very close on that, taking out that 288.42 level, and there's more unfilled gaps up here. You do have the 200-day moving average right there. Let's see what happens and see what happens when it gets up there and trades in relation to that moving average. Some folks may decide to take profits there. Let's see what happens there. We're gonna, again, it's a wait and see approach and respond versus reacting and and trying to short ahead of it because you'll get run over. Okay, so there's your SPY chart. Just to wrap things up on the 2-day chart, if it's not apparent that the trend is up. Okay, so here on the 2-day chart, it's just up, up, up. We haven't had any lower lows on the 2-day chart since you have to go all the way back here. All right, so April the 1st, you put a low in below this bar, but then since the 3rd of April, it's just been going gung-ho up. Right, so there's no lower lows on the 2-day chart. So on the 4-hour chart, oops, on the 4-minute, but the 4-hour chart looks like this. So here we go. Here is your outside bar down to start the Monday, goes inside bar, gaps up. This ends up being a buyable pullback right there, outside inside, and then pops up on Friday. So really, when you break it down like that, it is as clean as you can get, as smooth as it can get. Of course, when you're trading it live, it's very tight. This stuff's very, very tight, and you have to be very patient because these are not days that are, the indices were moving very much, right? Very, very tight days. But that's what the SPY was doing, and that's what all the indices were doing for that matter. So look at the Qs. I'm not going to go through too much of the Qs now, but it's basically the same picture. The only difference with the Qs is that we're actually getting very close now to reclaiming these all-time highs. So let's just measure it from where we closed on Friday to the all-time highs, only 10% away. So it's still Momo down. It's inside month right now, but it only takes 1 or 2 really big days, sessions, and you can get up to 10%, a 10% return there, and that'll put you back at all-time highs, and the Qs would have recovered from that huge pullback. Again, Qs being the one index that held up the best in this recent sell-off. So Qs not looking that far now from those all-time highs. Crazy enough to say. It could happen. So the Momo condition continues on the Qs. Look at that. Outside bar, up, up, up. Momo up. Right? So here's your low from the prior week's low. Did the Qs, was there any chance this thing was going to break below that low? Right? The prior week's low? It was very unlikely. It came down here, but you still had to come through that entire range to take out this prior week's low. Can it happen? It's tough to do that, right? So here, we're going to move our ranges up now like we do every week. So the same question is this. What's it going to take to create a weekly reversal to extinguish this Momo up momentum? You got to break below this week's low. So you got to see where you open up in relation to this bar here, and then can you reasonably break below that low? If you cannot, then again, the trend is to the upside. Do not fight price. SPY, I forgot to draw in our ranges. I'll just quickly pull it back here now. SPY a bit tight every week, right? So we had a 3% week on the SPY, not as big as the Qs. So this thing here now is setting up more closely for a potential reversal because wherever it opens up on Monday here is less to traverse to potentially take out that low. Whereas the Qs, right, you had a pretty big week. It was up 9.5%. So if you open up somewhere in here, let's say, you got to come back 9% to take out that prior low. So the Q is definitely the strongest of all the indices right now. So basically, to end the week, the Q is just going straight up Momo up. So you got Momo up in the week. Now you got Momo up on the daily chart. The Q is very, very strong. So look at that. Outside bar up, inside up, up. So no lower lows. It's Momo up now on the daily chart. So until you get a break below a prior day's low, that momentum continues to the upside. That's the easy trade. So if you open up on Monday and it pulls back down here but doesn't break below that low, you're looking for pullbacks to go back up again, right? So let's say it opens on Monday and it gaps down, opens up here. As long as it doesn't break below here, this Momo up condition still applies, meaning at some point the Momo will kick back in again. You can expect this thing to keep rocketing up. So for now, don't fight it. You're just looking for how price reacts to this current uptrend. There is your cues. Let's talk about Dow now. Same condition. Not going to go through all the higher time frames. Outside inside on the quarterly. Okay, same pattern on the monthly chart. That means outside bar down, inside bar. And this one here is not Momo up, but similar condition, outside inside, up up. So we want to see, can this thing do a reversal? It has to break down below this current week's low. It's possible because this week only had a 2.25% return for the Dow, meaning if you open up somewhere in here, it only has to go down about 2% or so to take out that low, and then that jeopardizes this run to the upside. The only issue here now is that you're trading well above the quarterly open and the monthly open, so you're not going to have time frame alignment. So you're not expecting this thing to fall apart completely. It's just not there yet, especially with the time frames down here, because those folks who are looking at these higher time frame charts, like the monthly and the quarterly, these are still going to remain green. Okay, this bar here is going to remain green until it gets all the way down here. But because it's inside trading right now, this is why we want to watch for the reversal. Because it's an inside month, you want to be aware if there's going to be a reversal, because that's what you expect to see when you have an inside bar condition. When you're trading inside bar on a lower time frame, the only reason that's not an outside bar or a bar that breaks out one side of the range is because you're getting that reversal back into the range again. So in order for this thing to remain inside month, right? So this is an inside month. In order for this to remain inside month, then price may do a reversal, meaning it'll take out a low here and come back into the range again to keep it inside month. So if you're betting on an inside reversal, or you want to see, an inside bar, if you think that's going to be the situation, then you're going to be very, very keen to watch to see if and when it takes out a prior low, so that stays inside the prior month's range. It doesn't fall outside of it. So we'll just draw this range here so you'll see very apparently. So that's the understanding here. I'm just going to clone that line here. That's the understanding of what's going to happen if you continue to trade inside month. Okay, so there's the ranges. See the way all the way down here, all the way up here, that orange line. As soon as this thing breaks below a prior low, all right, so this week, let's say it pops up and all of a sudden comes back through here again, then it can do this. That'll be inside bar trading. So long as it stays, right, inside of this huge range, it'll be an inside scenario. It could be choppy, but the good thing is that the bars are still wide enough to make money. But there's no. I'll show you the Bitcoin chart later. Things can get very, very tight if you go inside, and so that's certainly a possibility as well. All right, so that's Dow. That's the issue there. We talked about the weekly up, and here on the 2-day chart. Just want to look at this on Monday. Here we had a big strong bar to close on Friday. Thursday, Friday. These are 2-day bars. So what's the next bar on the Dow? Correct. So do you want to see if it goes outside bar up? Guess what? That's Momo up. The trend continues, right? Here you got to break above there to change this month from an inside month to an up month. Likewise, there's your month to the downside. So you got a lot of work to do. But look, you see that line there? That's the prior week's high. So you break above the prior week's high there, right? And there, it's a continuation. You break below there. So on Monday, Tuesday, you break below this bar here. Somehow that puts this pivot in play, and you can possibly get a week to the downside on the Dow. Okay, so there's your Dow. Now let's talk about Russell. The only chart that looks a little bit different than the only index that looks a bit different than the other three. That's because it never did this. It still has the outside inside, but it has a different scenario playing out on the monthly chart. So it's not a outside bar, down inside bar. It's just an inside bar for now. But again, furthest away from making those all-time highs. So to make those all-time highs, you got to go from where we closed to the prior high. You got to go 42%. So that's a lot of work for the Russell to do to get back to all-time highs, unlike the Nasdaq. So very, very tight week on the Russell, and the Russell is like the only index that actually closed in the red. So it could not really take off this week. Even though it did break above the prior week's high, it did close negative, so down 1.34% now. Interesting how it's finding a bit of resistance on this prior broadening formations trend line, right? So found a bit of resistance there. It's currently above it, but once again, you break below that low, this puts this situation in play where you break back through the pivots again. Okay, so let's go to the on the Russell. You look at this 2-day chart. So here at the end of the week, so look, going into this week, we had a Momo up condition. Momo up, up. Then on Monday, Tuesday, it goes outside bar, and now you got an outside bar down situation. So Momo currently down, but it ended in green for the past 2 days. So this coming Monday, Tuesday, if you break above this bar's high, we're going back up again. It's going to break above this pivot, create a new high on the weekly chart, and we're back up to the races. But if the Momo down continues, let's see the Momo down. If it breaks below here, you'll create a reversal on the weekly chart. That'll be very interesting to see play out because, again, this is only a 3.6% bar, but if it does come back through the range again, that will break below the prior week's range. So watch for that. And the Russell, it's been very, very tight stuff. So this is a fairly innocuous week. So it's basically kind of like a hammer, but also like it's basically like a doji. So fairly uncertain bar there. You run again, once again, looking for what the next bar is and how it fits into the picture that we've been drawing out here. That is kind of a mixed bag, right? A really mixed bag. So let's go to TSX now. How's that faring? The Canadian stock market, same as the SPY, Qs, and the Dow. Outside, down, inside, exact same pattern. Here, like the Dow, outside, inside, and up. Once again, it wasn't a huge week for the TSX, but a good week, up 1.36%. Nonetheless, still looks like the bar is in control because it closes near the highs. But you're watching those ranges, right? Watching this range here and see, can this low get taken out to create a reversal on it? Or if it doesn't get anywhere close to that, it just keeps chugging away, it's up, then you just stay long and strong. Don't try to get cute to call and call tops. So the TSX looks like that. And let's look at the just basically just slow grind up. It's the party's going on until that low gets taken out. So it's party on until that low shows you a reversal. Until that low gets taken out and gives you a reversal. Emerging markets. All right. So Momo chart was going Momo down, down, down. Inside so far. Interesting to see that's happening right below. Right. That's holding as resistance, holding right below that broadening formations trend line. So that's returning to resistance now. And let's see how it reacts to that. So in the weekly chart, outside, inside, up, up, just like the TSX chart, just like the Dow chart. Once again, if it breaks below there, you got to watch that. So all the charts are setting up for the same thing. We either get continuation by breaking above this prior week's high, or if somehow you get a situation, you get a reversal, and it may turn there's two types of reversals possible here with this current configuration. One, it opens here and then it goes down. That would be just basically breaking out below breaking out below this prior week's low. Or two, get an outside bar, meaning it breaks to the upside first and then somehow comes back through the range again, breaking below this prior bar's low. At the end of the day, whether you break up or down, you want to see if price can stay outside of this week's range, because that shows you strength, right? Because there's no strength if it stays inside the prior week's range. So this week here, it opened right in the middle of the prior week's range, but then it did close above the prior week's high. So that's outside of the prior week's range, correct? So same thing this coming week is, what does price do? Which side of price does it take out? And then does it stay above or below, those ranges? That will show you the strength of either the buyers or sellers. If we close above the prior this week's high, the buyers are still in control. So when we talk next week, if we close above this level, the buyers are still in control. If we close below this level here, the sellers were firmly in control by the end of the week. Okay, so that's basically as easy as it gets there. So that's what we're looking at on the emerging markets front. On this here, so now we have our levels. This is what you do not want to see if you're a buyer or a bull of the emerging markets. This set up an inside bar up, inside bar now, right? So it goes inside bar up, even though that's red bar, it did go up, inside bar. If it breaks below there, that's an inside bar reversal. Okay, so that'll be inside bar reversal. That'll take out that pivot, and then the price can possibly come back to the range again. And there's your weekly low. So that's what you do not want to see if you're a buyer. And that is, it breaks below this 2-day bar's inside bar. Okay. Otherwise, you get inside bar up. That's momentum again. You know, this buyer's showing strength, and they break above this current week's high. So watch that 2-day chart on emerging markets. Well, the bonds. What are people doing? Is it risk on, risk off? It's actually kind of a very tight month so far. TLT. Look at TLT. 3-month chart. It's basically consolidation. So inside, up, inside, really outside that Bollinger Band. So we're really sitting here, but still, you know, it's doing the Bollinger Band walk right now. So it needs to continue climbing up. If you break below this low, it's not going to happen this quarter because this is a quarterly chart. The bar's not closed yet. You cannot say it's going to break below that low because this bar's still being formed. So right now it's doing the Bollinger Band walk for the time being. That's all you can say about that. It's an inside quarter. Same thing here. Outside bar, inside. Huge bar here, right? Inside that bar. How are you going to get outside that bar? Probably not. You're probably going to stay inside for the month of April. Now on the weekly chart, outside bar. So you did take out both sides of the range there, but not decisive enough to close above or below the prior week's high. So it makes the next week very, very important because once again, you want to see, right, which side of price, which side of the range is price transacting against. Is it transacting above this bar's high, making it Momo up, or does it somehow break below and cause it to go Momo down? So we're watching for that on TLT. So you got an outside bar, not significant enough by itself, but you do want to see what that next bar is, just like you want to see what the next bar is here. So look, big red day on Friday, okay, but again, not in itself significant enough. You need to know more now because it's an outside bar right at the prior, right? So that created the high of the week. If somehow it goes outside bar up on Monday, right? It breaks above here. You're gonna go back on the Bollinger Bands again, but it's you know, Momo up. If it goes down, it's Momo down, and you know, we want to see how that can possibly take out that low there. The 2-day chart gives you this possible reversal setting up here now because it goes inside up. That's Momo. Inside up up. That's a Momo condition, but you get a break below here, that low there, you possibly come out the other side. So that would take out that below there if it breaks below this bar's low. Once this bar closes and it breaks below there, you're putting that pivot in play. That would then take out the prior week's low, and that would create a Momo down condition, right? So that's what we're talking about. This is why it's significant. That's your outside bar. If this week here now you do a reversal, comes out the other side, that's Momo down on the week. So you can expect bonds to then get significantly weaker. Then you have to try to figure out, well, what's that significance to the overall market? If bonds are selling off, then what's, you know, then you know, it's clearly no longer a risk on environment or risk off environment. Let's talk about gold, because gold this week was did a little head fake and actually chopped me up a bit as I tried to do a little cute trade there, and I let it go a little too far against me. But here it is. So gold right now, I would still be a buyer of gold here. If there's the right setup, because gold is still signaling a lot of strength. So this week notwithstanding, the bigger time frames are telling you that gold, you know, is to be bought on the right type of pullback. So outside bar up, inside bar up, up, Momo up on the quarterly. No slowing that down. It's only come back a little bit now after breaking above the prior. Actually, we're not quite at those highs yet. This is at 1798.7, 1788.7, right? So $10 away on gold from making a new high on that contract, MGC futures contract. On the monthly chart, we do have a Momo up condition on the monthly chart, right? So here's your gold here, outside bar up. Okay, so Momo up, has pulled back in again a bit, but still very, very strong on the monthly. On the weekly chart, we had a bit of continuation here now. Inside bar up, we had price above here, but it did come back in the range. So that's what happened there. It came back in the range. And so going into this Thursday's jobless claims report, I was expecting a bigger move out of gold, because like we saw last week, all the bad news has basically turned into good news. That was basically the title of last week's video. is that bad news is good news. And the jobs claims came out, and it was, again, bad news. 22 million people unemployed over the past 3 weeks. And it was expecting gold to rally a bit because that's what we'd seen the prior two jobs claims numbers. This time around did not rally. It had a small little pop, but then it pulled back and creating this outside bar. So I took this trade here. So it ended up being on the week, outside bar down. So you got Momo down now on the week. Good shorting opportunity here. I did not take it. But there's a good shorting opportunity here when it broke below Thursday's low. Basically sold off all Friday, down close to 2%. Nothing really big on gold, but it was a good move on Friday to the downside. Profit taking, people getting short. Now on the going in on Thursday was a nice setup here. I took the 6 hour, and probably could have taken profits going into the number, but decided to hold and see what's going to happen here. So gold pops up early in the week, right? Then comes back and tests that weekly open, creates a inside and down, and I buy this pop above here. Okay, so I buy that pop above there at the 1748.1 area, and then it pops up, taking out these pivots. I was expecting that. I was hoping that they'd take out that pivot there, 1788.7, to create a higher high on the week. Did not do that. It got as high as 1768. So it wasn't quite strong enough to take out. Took out that pivot, and that pivot, but not strong enough to take out that pivot. So came back in, and I got stopped out on that trade. So it is how it is. And then they had, look at this momentum, outside bar down, right? So the people took some profits, they got short, and they stopped out anyone who got this long in the sequence from all the way from here to there, right? So anyone who bought from here to there is either underwater or got stopped out. So MGC now, you're waiting for this thing to pop up, meaning this is outside bar down now, right? So on the daily chart, when do you get a higher high to extinguish the momentum? So it'll work like dominoes. So on Monday, you have an outside bar and down situation on the 6 hour chart. You're waiting to see a high get taken out, and that will extinguish the momentum on the 6 hour, which will eventually lead to a momentum getting taken out on the daily chart. Okay, so there's your MGC. BTC, let's talk about digital gold, if you want to call it that. BTC USD. I got stopped out of my Bitcoin trade, as I think I mentioned last week. I was long Bitcoin, but I was saying as soon as that week turns red, I'm going to be out of there, or breaks below as a reversal, I'll be out. And that's what happened. I think it happened this week. Yep, happened this week. That's what stops are for. And so now Bitcoin trading pretty tight, but it reminds me a lot about some of the charts that we talked about around the indices. So right now, outside inside on the quarter, clearly outside inside, right? So this is how is it going to take out either side of that range? Tough. It's probably going to be inside quarter going out there unless something happens. The only fundamentals that are on the calendar, can't even say it's on the calendar, but that are in play is the potential. Well, it's not the potential, but the upcoming Bitcoin halving. If and when that happens, or when that happens, then we want to see what kind of response comes out of that. But right now we're trading firmly inside quarter. On the month, inside month. So tight stuff on the Bitcoin chart. Okay. On the week, this is what happens when you get inside months like this. In order for it to stay inside month, it has to stay within the parameters of this orange line inside the range. So I'll just take this orange line here and draw it to both sides. So on the weekly chart now, there is your range from this top end, that's the orange line there, to the bottom end, that orange line there. As long as you stay inside this range, that's inside trading. And so anytime you have an inside bar, you can expect there to be chop. So you have to expect reversals. So this week here, when it broke below this prior week's low, so I'll just draw this in here. When it broke below this week's low, I stopped myself out of that trade. So I had been long BTC from this week here, stopped out, small loss, and got out when it broke below there. But now look, the bars have stepped back up again, and if the next, this coming week pops above this week, then you have another reversal back to the upside again. And that's what I'm talking about when you're watching reversals, because when you have that inside bar action, that's what you can expect to happen, and that you're going to get reversed upon, or multiple reversals inside that bar. So this week for Bitcoin, the buyers bought it back, looking like a hammer right now. Can it break above this week's high? That will create another reversal back to the upside again. Again, maybe take it higher. So Bitcoin looking like a potential buy here now if it breaks above this current week's high. I'm actually in again. I bought on this sequence. So here on the daily chart, outside, inside, and up. So I did not buy this signal. I like to take things on reversals. So here on the 6-hour chart, excuse me, I took this signal here. Outside, down, and then once it breaks above here, it's an inside bar reversal back to the upside again. So I get involved here. I missed this bar, I wasn't paying attention, so I got involved there. And so currently long Bitcoin as of the 71.18 area. Okay, so that's why I'm long Bitcoin right now, as well as 4 other coins. So that's the story for Bitcoin. So that's begin to wrap things up. I'm gonna do a little something different this week. Instead of doing our usual stars and dogs, I'll cover off the FAANG names because they're leaving some clues about what could potentially happen in terms of how the NASDAQ may play out its recovery. So let's go through the FAANG names. Let's look at Facebook first. Facebook, big inside month. Okay, so this looks a lot like the Russell, where you have an inside month and it's not a Momo down situation. It's just basically inside Facebook not participating as much in the recovery as the rest of the some of the FAANG names, right? So only up 7.5%. So Facebook inside month, firmly inside this broadening formation. There's no signal here that's telling you that this is going to rocket back up to the upside like it's some of these other names. It is going week by week up though, right? So we have not had a lower low for here 1, 2, 3, 4 weeks. But just like we're watching for with the other indices, you do not want to see Facebook break below there. Otherwise, that's going to create a reversal, right? Back to the downside again. But just like BTC, like I just showed a few moments ago, this is what can happen. Because BTC is still trading with full time frame alignment to the upside, or the higher time frames, look what happens. That purple blue line right there, that's your monthly weekly open. So yes, it does a reversal, but as long as this line holds, that means the quarter and month still appear green. And so there's not going to attract as many sellers because the higher time frame guys, the monthly, the weekly guys, monthly and quarterly guys, the charts are not looking red yet. And so they may just elect to buy it back again, causing a kind of a head fake bear trap for folks who try to short it. So until you can actually break below this level, you're not going to get wildly bearish. So back to Facebook, same thing, right? If you break below this low here, you have all this work to do before you turn the quarter and month red. So it's easy to come back into here, but it could pop right back up again, causing a bear trap for anyone who gets short too quickly and too aggressively. Let's talk Apple. So Apple looking like it's trying to reclaim, it's back above this broadening formation again, inside month. Okay, so you're not that far off from taking March's high out. Got a little bit of work to do here, inside month on that, and then same condition as Facebook. So we see that here now, just a series of higher highs on the weekly chart. Amazon has definitely been one of the winners in terms of this whole coronavirus pandemic. All-time highs. So this past week hit some all-time highs. Outside bar down, we'd identified it right just a couple weeks ago. Outside bar down, and then as soon as you break above there, that puts that pivot high in play, and then you get your all-time highs, and there's your all-time highs in Amazon. It's again at this point here, it all started from here, right? Inside bar down, then it goes outside bar. So anyone who sold this thinking they're gonna make a bunch of money, they immediately got reversed on, and then it goes outside, inside, and gone, right? So there's your chart. Outside, inside bar, up. 3 consecutive weeks now up from this breakout bar right there. Okay, outside, inside, up. So there's Amazon. Continuation moves. So now you're looking to see, is there going to be a reversal? What that would look like, you get to see this low get taken out. Okay, so that's pretty far away. How are you going to get Amazon to reverse on that weekly chart? Lots of work for sellers to do that. Okay, so Amazon looking very strong. Netflix, the next name on the FAANG list, looking very strong as well. Hit some all-time highs. Now Momo up on the monthly chart. So Momo up on the monthly. This week it went inside up to those all-time highs. Inside week, right? Up. There's your all-time highs. Now to create a reversal, it has to break below there. If it can go inside bar up and down, that's an inside bar reversal. But again, you have to come back through this entire range and break below there. That'd be very interesting if it did though, right? Because if it breaks below this quarterly monthly open, then it can come and take out this prior week's low. Again, but that's a lot of work to do because this was a 14% week. So that would be what's required, though, for the bears to turn it around in one single week. Google. Is Google benefiting? Let's take a look. Google looking a lot like the indices. Outside bar down, inside bar. This looks just like the SPYs and the Qs and the Dow. Outside bar down, inside bar. Okay, so this looks a lot more like the indices, and it's probably is tracking that right now. So that's what it looks like so far. Weekly chart is Momo up though. Okay, so this week had a decent week, up 6%. Outside bar up, Momo up again until Google breaks below prior week's low. That's Momo up condition continues. All right, so there's your Google. Now, one name that does, I know it's not a FAANG name, but I think reveals a lot of clues is Microsoft. So Microsoft, I think this is what it's going to look like if the Qs are going to do that type of recovery to all-time highs. It'll look like this: outside bar down, and then look, outside bar down, and back up again, broke above this high. Now Microsoft looking like it can come back and test those all-time highs back in February. So Microsoft very, very strong right now, heading to those all-time highs. And look at the weekly chart. Momo up on the weekly. So Microsoft definitely one of the winners here, leading the charge back to all-time highs. How far are we from all-time highs on Microsoft? From when we closed on Friday to the highs in Feb, only 6.77% away. So I think that will be like we saw last year. We were wondering how the Qs are going to make all-time highs. Well, Microsoft's the one that did it first. It was the first one, it was not the first one, but it basically played out on the Qs the same way it did on Microsoft. So Microsoft right now signaling if we keep following this, it's going to get back to all-time highs. Okay, so that's Microsoft, and that's it for the our FAANG plus Microsoft list. Here's a few fast fire names now. Let's just take a look at a few names I think are interesting. Speaking of the monthly chart, don't forget we talked about AMD already a few weeks ago, right? AMD, same pattern as Microsoft. Outside bar down. Now look, it breaks above that pivot, going to that high, getting close to all-time highs on AMD. NVIDIA, same looking kind of chart, right? So here, big hammer, and now come back up, kind of hit those all-time highs there. We got Roku, same sort of scenario. Outside bar down and coming back up through the range, potentially taking out that high. Not all-time highs, but certainly the momentum now going back up through the range. Okay, so this week it had a nice little breakout on Roku. 2 inside weeks in a row, and then pop on this week's price action because they also had earnings this past week. And Costco. Speaking of beneficiaries, some grocery names have been definitely in play. So here, Costco getting close to all-time highs. Look at that. Outside bar. People getting chopped up here. Inside bar, and now we're currently trading inside bar. But if you break above there, you got all-time highs on Costco. Even Walmart, right? We talked about Walmart a few weeks ago, how people are getting chopped up here, right? Outside. Anytime you have 2 outside bars in a row, then all of a sudden, pow, the name is going Momo up now into all-time highs on Walmart. Okay, so there's your Walmart. And finally, just to follow up on one name that we talked about a few weeks ago, Dollar General, yes, all-time highs. Same type of condition. Outside. People are getting killed in here. So outside, and then breaks above there, plowing into all-time highs now. Dollar General, people are doing a lot of shopping there, obviously. All right, so that takes us to the end of the video. Once again, I want to thank you for joining me this week. If you enjoy the videos, please give it a big thumbs up. We would really appreciate that. If you want to get notified as soon as these videos drop, you can either A, subscribe on YouTube, click on the big subscribe button, or B, go to my website, thetradingedge.org, and then join our mailing list. From there, you get a weekly email with this video, as well as some of my thoughts and perspectives around trading. As always, I wish you a great trading week, and if you have any questions, feel free to drop them either on Facebook or on the blog, and I'll be happy to respond to them. So, happy trading, and look forward to talking to you again next week. All the best.